Good morning and welcome to Market Cafe with me, Lisa Fernandez, and here is my colleague Snehi Shah. Very good morning to you, Snehi. And this is the show where we take you through all the news, announcements, both on the international as well as the domestic front. And so stay tuned. Throughout the course of the show, we will be coming up with important updates lined up for you. So on the US market, Snehi, let's start with the international market first. The US market, it resumed after a holiday shortened week, and at the same time the FOMC minutes was also out. So we know that that's a very important factor for the movement of the market. So tell us more how it impacted the US market.
Absolutely, Lisa. Wishing you a very good morning and wishing all our viewers a very good morning as well. Let's see what's coming in from the global handover, and let's begin with the US markets then. And stock futures were little changed in overnight trading following a losing session on Wall Street. Futures tied down to the Dow Jones Industrial Average lost nominally, while S&P 500 futures and Nasdaq 100 futures also hovered around the flat line. The shortened trading week resumed Wednesday after a break for the 4th of July holiday. The major indices logged modest losses, and the Dow Jones Industrial Average lost almost 0.4%, while the S&P 500 dipped 0.2%. Both indices snapped 3 days winning streaks, and the Nasdaq Composite also finished almost 0.2% lower. Now, Wall Street also combed through minutes from June's Federal Reserve policy meeting, where members opted to skip a hike. We'll talk about this later on the show as well. And the latest findings showed that most officials would support more increases going ahead. Let's shift focus to Europe then, and European stocks closed lower on Wednesday as investors assessed the latest negative signals from the Chinese and EU economies. The benchmark stock 600 ended with a downtick of 0.7%, with insurance and utility stocks falling almost 2% to lead losses. Now, the index has seen narrow movements in the previous 3 sessions as the mood turns cautious ahead of the second quarter earnings season. Meanwhile, the PMI figures for the Eurozone showed business output contracted in June. So, fairly mixed handover coming in, not very positive, but on the other hand, not largely negative as well, coming in from US as well as Europe. But with that, Lisa, that's what the global handover looked like. But also take us through what crude did.
Well, the WTI crude, it was up 3% on Tuesday, and that is because there was no WTI settlement on Tuesday. So it mostly caught up with the gains and it narrowed the price gap with Brent crude. So we can see that after it gained about 3% yesterday, it's up, it's around flat at $71.82 dollar per barrel, and Brent is down around 0.16% at $76 per barrel, and the crude price with these gains, they have hit the highest level in 2 weeks. So that's on the crude check for today.
All right,
now,
Lisa.
yes.
Thanks for those details. Well, let me also take you through all the important cues that you should be keeping on your radar today, domestic as well as international. And let's start with the key figures that you should keep on your radar today, and the US initial jobless claims as well as the US crude oil inventories figures will be coming out, so keep an eye out for these numbers. On the corporate action front, on the Dalal Street, you've got weekly expiry today, and Adani Green Energy Board will meet to mull fundraising. The BSE board will also consider share buyback. On the IPO action front, you've got Senco Gold IPO. Today is the last day for to apply for that, so that will close for subscription today. On the annual general meeting front, you've got ICICI Lombard, Coforge and Cera Sanitary Ware. They will have their annual general meetings. Among other key events that you should be watching out for, you have the Zee-Sony merger. The NCLT hearing will take place today. FM review meet with the PSB banks will happen today. So FM Nirmala Sitharaman will be meeting with public sector banks today. And Meta will launch Twitter competitor Threads today. So keep an eye out on all these cues.
And let's see what other global stories are in store for us. The Fed released its June meeting minutes, which showed that almost all the officials have indicated further tightening is likely, but that would be at a much slower pace than the one seen last year. So that's a silver lining from the minutes, and they unanimously decided against a rate hike amidst the concerns over economic growth. The officials also noted that the economy was facing headwinds from tighter credit conditions, including higher interest rates, which would likely weigh on the economic activity, hiring as well as inflation. However, the extent of these effects, that remains a bit uncertain.
All right, and US factory orders missed street estimates in May, despite solid demand for goods like transportation equipment, machinery, as well as electrical equipment, appliances, and components. Orders for transportation equipment increased 3.8% in May after accelerating 4.8% in the prior month. Civilian aircraft orders soared 32.8%, but motor vehicle orders fell 0.6%.
And the United States has lashed out against China after the latter imposed curbs on critical metals used in making semiconductors. Now, this marks the latest chapter of US-China tensions that has been escalating in recent years over issues like trade tariffs, the origin of the COVID-19 pandemic, cybersecurity, spying allegations, as well as technological competition. Well, in retaliation, US is also considering to restrict China's access to cloud computing as part of attempt to limit that country's ability to develop artificial intelligence capabilities.
But in positive cues then, General Motors' new vehicle sales jumped to double digits both year-over-year and quarter-over-quarter. The auto giant also removed big improvements for sales of newer EVs such as the Hummer and Lyriq. Traditional automakers, including GM, are making a major shift to electric vehicles.
And Bank of America will boost its quarterly common stock dividend to 24 cents per share from 22 cents per share, and this is from the third quarter this year. The decision comes after the Federal Reserve stress test results. Remember, Fed's annual test, which showed major lenders including BofA have enough capital to weather a severe economic slump, paving the way for them to buy back shares and issue dividends.
Alright, shifting focus to social media then, and Instagram, owned by Meta Platforms, has officially introduced Threads. It is a new application explicitly developed to compete with Twitter and posing a challenge to Elon Musk's ailing social media platform. Ahead of the launch, Instagram is offering custom tickets to its users. Many Instagram users are sharing their tickets via Instagram stories.
And just when we thought that inflation has tamed, it's a tomato shock as a 25% jump in cumin as well as turmeric prices. Chilies are at 200 rupees per kg, while tomatoes, they too are being sold at 150 rupees a kilo. Well, the household budgets go for a toss this monsoon season as prices of vegetables as well as spices have shot up. And here's a report from across the country. My colleague Aishwarya is here from the vegetable market to get the latest updates on the soaring prices of the staples.
Right here in the Dadar market at this point, tomato prices are ranging anywhere between 110 rupees to 150 rupees. And the reason behind this sort of inflation, especially across the board in vegetables, is being given to be the heat wave, delayed monsoon, which has actually affected the crops as well as supply chain. Now, many consumers are here and buying tomatoes, but what these vendors have told us that earlier they were selling about 90 kgs per day. Now they're unable to sell even 30 kgs per day.
अभी तो काफ़ी महंगा साबित हो रहा है, सब मार्केट ही ये इतना महंगा हो रहा है, लेकिन खेती करने वाले भी क्या करेंगे कि बारिश के मौसम में उनको भी करना जरूरी होता है, क्योंकि उनको जो रेट मिलना चाहिए वो रेट उनको मिलता है नहीं.
Well, that's the word coming in from some of the buyers here, but let's get in a word from the vendors who have been talking about how they've been unable to procure large amounts of tomatoes.
100 किलो तक बिक जाता था, अभी 50 किलो भी नहीं बिकता, 50 किलो भी नहीं बिकता है.
तो इतने दिन आपको टमाटर खरीदने में कोई तकलीफ हुई?
नहीं, टमाटर मिलता है, सुबह जल्दी लेना पड़ता है तो मिलता है.
हाँ, तो बट कुछ कमी नजर आई आपको होलसेल में?
नहीं, कुछ कम नहीं हुआ है. अभी रेट
किलो से अब 30 किलो भी नहीं, 50 किलो.
हाँ, नहीं बिकता.
Well, that's the word coming in from the vendor as well here in the wholesale market in Dadar.
Suddenly, the prices of tomato have increased. Right now, we are reporting from Vittal market of Bhopal, where we will directly interact with the tomato seller. He will tell that what all the price he has decided, and today what price going on in Bhopal. आज ये बताइए, टमाटर जो है चर्चा बना हुआ है. आज टमाटर का भाव आपके यहाँ क्या है?
160 रुपए किलो टमाटर.
अरे 160 रुपए भैया, ये बताओ, अब पिछले हफ्ते 30, 40, 20 रुपए किलो टमाटर कई जगह तो फेंकता फिर रहा था.
टमाटर क्या, अपने जब फसल उस वक्त ज्यादा थी, ये बारिश होने से जो है कि अपने यहाँ की फसल खराब हो गई. ये सब वो टमाटर से मुराद नहीं है. आप धनिया मिर्ची जो सब्जी के अंदर जो अपन डालते हैं मेन, वो भी महंगा है। आप कोई भी सब्जी पूछेंगे तो भटे भरते के 150 रुपए किलो, लौकी 60 रुपए किलो, प्याज हो गई सब 30 रुपए किलो।
You know, the prices of tomatoes, if we talk about, they have hiked. You have come here just to buy it. What was the earlier price, ma'am, and what do you have to say on the price?
Earlier price was almost 3 times less, almost 30 rupees a kg. I had to come to this place only because I had to buy tomatoes. They are skyrocketing at this moment. All the vegetables have gone sky high, and I don't expect this thing from Modi in this country.
ये टमाटर हमने कल लिया था 25 रुपए का रेट का, आज इसमें सीधे सीधे आधे पैसे उतर गए, 1200 रुपए का रेट, अब ये रह गया 1300 रुपए का रेट का। ये लॉस हमें ही हो रहा है। बताओ, थोड़ा सा महंगा होते ही महंगा ले लिया, अब बाजार गिर गए तो घाटा हो गया हमें।
In case of tomato, we should remember that the cost of production of tomato is about 10 to 15 rupees a kilogram. And only in March and April this year, the farmers were not able to sell their tomatoes even at 5 rupees a kilogram. So obviously, it is possible that many farmers did not go in for tomato, and I do not know what will happen in the Kharif crop, because the main crop of tomato is Rabi.
Two things have actually happened. If you go back and look at the months of April and May, nearly 10 to 12 states of India received unseasonal rains, where the average rainfall was much higher than what you normally see in terms of long-term deviation. So clearly there were rains, but they were rains at an untimely period, number one. Number two, prior to this, they were preceded by extreme heat wave, which has kind of become a phenomena in the month of March.
When we look at the overall inflationary trends, the RBI has done a phenomenal job in, managing the inflation within the bands that are set, the 3 to 6% band, and we are somewhere at around 4.75 in May, June. And definitely this will have, this will dent the RBI efforts, and we will start to see a creeping up in inflation, because food inflation accounts for almost 1/3 to half in any month. And typically in a month like this, when the food inflation has rocketed so much, so quickly, definitely maybe a 25 to 30 basis points increase is possible in overall inflation.
All right, so that's the status check of the prices of tomatoes as well as other spices in the market, which are all skyrocketing because of untimely rains. But let's shift focus from tomatoes to sports then. And the Blue Tigers have created history on the football pitch. The Indian football team defeated Kuwait in a thrilling final of the South Asian Football Federation Championship to lift the trophy for a record 9th time. The man who engineered India's win was skipper Sunil Chhetri, who scored 6 goals and was the top scorer in the competition. Times Network's Karishma spoke to the man himself to reflect on India's historic run and the future of football in India. Let's take a look.
At the exact moment, I think we were quite nervous. After the nervy first half, I think we were a little bit dominant in the second half. We wanted to win the game in the regulation time only. We did not want the game to go to the penalties, because we had a long game 3 days back in the semi-finals also. And also when the other team has seen you taking penalties, it gives them the edge. And we wanted to finish it before, and we had our chances. We couldn't capitalize on them. Nevertheless, I think we as a team kept our nose better than the other team. This SAF championship was a little bit different and important because two teams, Kuwait and Lebanon, were invited,
Yes.
which are different. And without demeaning the SAF region, I can also say a little bit better. And the stats shows it, because both the teams were in semi-final and finals. And to win the SAF Cup against not only the SAF region, but also Kuwait and Lebanon makes it that much special. Winning it at Bangalore makes it more special. The way fans turned up was outstanding. I'm not sure whether a lot of people understand, but at Bangalore, seeing 80K Mohun Bagan, seeing East Bengal, seeing Manjapara, Kerala banners coming and supporting the country was special. The chants and the songs and the way people were happy after the game was special. So I think, yeah, we had a good night. Everyone who came there to watch us and who were watching on telly had a good night. So yeah, it feels good.
And I actually wanted to speak to you about the fans there in the stadium singing Vande Mataram all together. It was a beautiful sight to see. But for those of us who were not there, present in that moment, savoring that moment, could you be able to describe it in words, what it meant? And does that what it means to represent India at international level?
They very lovingly forced me and my teammates to sing along with them. It was not scripted. It was not on the cards. But when they are very famous for singing different chants for players, for moments and stuff like that. We had no idea this will come. We had no idea it will come in the right place, in the right time. We were all charged up. We had just won, and hearing them sing that song so loud just made and forced us lovingly to sing it. All the boys were singing the song, and it was outstanding. When a stadium vibrates with one song and one of the most favorite songs of ours, it was good, man. We couldn't stop ourselves from singing, and we kept singing throughout the night.
And that was Blue Tigers taking India to glory. But with that, let's slip into a short break. More news and updates on the other side of the break, so stay tuned on the show.
Good morning and welcome back to the show. Thanks for staying tuned to Market Cafe. Now let me take you across through what the Asian markets have been doing since morning. And Asia Pacific markets were lower after minutes from the US Federal Reserve revealed that the central bank was split on its decision to pause its rate hikes in June and sees more hikes ahead at a slower pace. Let's look at what Shanghai is doing. Shanghai is up nominally in trade today, barely holding there in the green, so that's what Shanghai is looking like. Hang Seng on the other hand is down almost 1% in trade. Moving on, you've got Kospi also. Nominal downticks coming in for Kospi, 0.3% lower in trade. Also followed by that, you have Australia's ASX 200. Sharp cuts coming in over there, almost 1.1% lower in trade today. A splash of red coming in for ASX as well. So this is what Asian markets are largely looking like. And shifting focus to GIFT Nifty, then GIFT Nifty is also trading with a downtick of 0.1%. Not a major cut, but also could indicate at a rather flattish start to our markets today. So this is what the Asian markets as well as our GIFT Nifty are doing in trade right now.
And now let's see what's lying. Welcome back to Market Cafe. Thank you for staying tuned in with me, Lisa Fernandez, and my colleague Snehisha. Well, let's move on to the auto world, and it's a season of launches where Invicto is Maruti's 8th product in the Nexa lineup. This premium passenger vehicle will be available in both 7-seater as well as 8-seater configurations, offering versatility to cater to the needs of the customers. Invicto will also go against the likes of Toyota Innova Hycross and can be regarded as an alternative to the Kia Carnival as well as Toyota Innova Krista in the Indian market. Well, my colleague Sumit Chaturvedi, he caught up with the MD as well as the CEO of Maruti Suzuki, where he'll be discussing about the growth plans and also what are the other launches in the pipeline.
The Indian automobile market is evolving pretty fast, and this segment also, we think for the future, this segment will increase. So we have to have a presence in this segment. So this is the first step for us to get into this market, which may expand in the future strongly.
But you want to be number one SUV player in India. What's the overall plan for that? When will you become number one SUV player? And what about margins there? Higher margins, obviously.
The SUV market, as I said, is expanding pretty rapidly, and we only have one product in this SUV segment. So in order to strengthen our lineup, we added 3 new models. So now we have 4 instead of 1, and our market share in SUV segment jumped up to the over 20% right now. And we are sure that we will expand furthermore with those new 4 products in SUV segment, and will become number one. That is simply it's a matter of time that we will reach this number 1 position in this segment.
What's over there? You are going to double your revenue by 2030, as we understand you said. What are overall plans by 2030?
So within the global Suzuki plan, the Maruti Suzuki in India has a very big part of our global plan. First of all, the Indian market will grow from the current market size of about 4 million cars to at least 6 or 7 million cars by 2030. So only in domestic market we have to prepare for this big growth. And on top of that, our export numbers also jumping up. So we have been, exporting cars from India about 1 lakh. But year before last and last year, we export more than 2.5 lakh vehicles from India. Actually, last year more than 2.6 lakh.
Alright, keeping it with new launches then, British motorcycle company Triumph, in collaboration with Bajaj, has launched its new bike models, Speed 400 and Scrambler 400. These two entry-level models in a brand new single-engine platform have been developed from the scratch, which offer a British design with Indian build quality. The pricing of the Speed 400 will be 2.33 lakh and Scrambler 400X's prices will be announced soon. The management has said the exports will start by the end of the year and bikes will be sold only through Triumph dealership. This new collaboration is surely going to give a tough competition to other companies such as Royal Enfield and recently collaborated Hero Harley as well.
Quite an interesting and exciting lineup of launches. But now we're moving on to the metal sector. The investors, speaking at the 116th AGM of Tata Steel, Chairman N. Chandrasekhara, he spoke about the outlook for the steel sector. He underscored that the opportunities for steel, and he also reiterated his view that the steel demand growth will continue to keep pace with the GDP growth over the next decade. He also expressed confidence on Tata Steel's ability to achieve 2030 target of an overall 40 million tons per annum capacity in India.
Alright, shifting focus to pharma then, and trouble seems to be brewing at PharmEasy. According to reports, the online pharmacy startup has informed its investors that it plans to raise as much as $300 million in a new round of funding at a 90% markdown from the previous valuation.
And now talking about the job market, if you're a fresher and looking for a job, then you should add skills such as design, analytics and JavaScript to your profile. Well, this is according to LinkedIn's survey, where they say that the demand for skills in design, analytics and Java, that's skyrocketing, especially for freshers. The survey has also highlighted the need for knowledge in risk consulting, investment management, finance, admin in bachelor's degree holders. And according to the survey, financial services, administrative as well as support services and accommodation sectors, they are some of the biggest job providers currently. It also notes that the firms are bracing up flexibility, and there is also a 60% rise in hybrid roles at the freshers level.
Alright, shifting focus then to RBI, and the RBI is now allowing card users to issue cards across more than one card network. So what does this mean and how will it help? My colleague Ankur Mishra is here to break it down for you.
Yes, Reserve Bank of India has issued a draft circular regarding the arrangements with card networks for issuance of debit, credit as well as prepaid cards, and the observation made by the regulator is that at the time of the issuance there is not much choice for the customers sometimes, and therefore there are directions which are still based on a draft circular, and the regulator has said that the card issuers shall not enter into any arrangements with the card networks that restrains from availing the services of other card networks, meaning there is clear no for any exclusive tie-ups with any card networks, so that the choice is not there for the customers. The other direction says that card issuers shall issue cards across more than one network. There cannot be just one network for any of the banks or NBFCs. Apart from that, the regulator also says that the card issuers shall provide an option to the eligible customers to choose among multiple card networks. This may be exercised by the lender at the time of issuance, or also this needs to be implemented at the later stage. However, the implementation date which has been given by the regulator is 1st of October 2023, and till 4th of August next month, the lenders can, the stakeholders can send their comments. It needs to be seen whether or not there is some change in the draft circular, because the idea is clear that there should be more choice for customers, and this is clearly to avoid any concentration risk.
And sources also tell your channel that the much awaited data protection bill will talk about the tech regulations that has been approved by the cabinet, and the bill is now set to be tabled in the monsoon session of the parliament. Samir Dixit has more on this in his report.
The Union Cabinet has cleared the Digital Personal Data Protection Bill 2023, and now the government is all set to table this important DPDP 2023 bill in upcoming monsoon session. Government is confident that this time they will be able to pass this bill from the parliament, and then they will implement it. Now, initially this bill, DPDP bill, was introduced in November 2022, that is last year, and then it went for multiple consultation, even when it was resent for interministerial consultation. Then also after detailed discussion, now this bill has been approved, has been given a green consent from the cabinet, and now it will be tabled in the upcoming parliamentary session. Now this bill focuses on the jurisdiction of the personal data. What we are getting to know from the government sources, that this bill aims to provide more security and safety for the online as well as offline data of any individual. So an individual will be having the right to not just access the information, request correction and deletion, and not just this redressal for grievances will also be provisioned in the DPDP bill, and individual will be having a complete right when he will be giving consent to use the data, then only it will be used by any given agency. There will be certain exemption or some sort of pointers are there. For example, certain data which comes under the national security purpose, then it can be utilized by the government or any government agency, but under the law provisions. So these sort of exemptions are there, but largely individual consent is required to process the data. Moreover, when the purpose is solved, then that particular data will be erased, will be deleted from the records. So the whole intention is to secure the personal data and not to misuse it, and to maintain that there is a full compliance of this DPDP bill. A digital data board will also be set up by the government. So this DPDP bill has been cleared by the cabinet, and now it is all set to be tabled in the upcoming monsoon session.
All right, thanks Amir for all those details on the data protection bill. But shifting gears then, investors have recently been seen preferring pure play refiners over OMCs. But why are the trends working in favor of the pure play refiners over OMCs? Somit is here with the top 5 reasons.
As you can see in the data or the share price move over the last couple of months or the last 3 months, pure play refiners like Chennai Petro and MRPL have been preferred by investors a lot more compared to other oil marketing companies like Indian Oil Corporation, BPCL and HPCL. Now the reasons behind this is, firstly, they have next to negligible marketing exposure. Now the general market perception at this moment is that though marketing business has been good enough for the oil marketing companies going forward, that may not be the case, because given the fact that election period is starting and crude prices are lower, this market is expecting fuel prices to fall, which would in a short lead to lower margins going forward. The second fact is that in oil marketing companies like Indian Oil Corporation, BPCL and HPCL, the government is looking to infuse funds via equity. Now because of this, there would be EPS dilution and hence some correction we have seen of late in this oil marketing companies. When it comes to the refining environment, it has been pretty much a conducive and a stable, and with no windfall tax, this pure play refiners have also been able to export their product. Now though if you see, the gross refining margins are lower than what it used to be earlier, but given the fact that they are importing cheaper Russian crude, their gross refining margins are also getting a boost because of that front also. Now of late, in the past few quarters, we have seen some consistent earnings performance coming in from this pure play refiners. Also, the cash flow has been stable, and the street has also started to reward this consistency in the earnings of the pure play refiners. And lastly, because of stable cash flows, the pure play refiners like MRPL and Chennai Petro were the only ones that have seen a reduction in their debt front. In fact, all the other oil marketing companies have seen a growth in their debt, and this is also one of the reasons why we are seeing such kind of an up move in the pure play refiners. In fact, Chennai Petro is largely debt-free. The debt on its book is related to only working capital. However, given the fact that it's a commodity business, there are always a risk involved. Also pose a sharp run-up that we have seen. The consensus view also suggests a downside. Now, the highest target price on the street is from Anand Rathi. For MRPL, it stands at around 79 rupees, and for Chennai Petro, it stands at around 448 rupees.
Thank you, Somit, for giving us a perspective on why the OMCs are lagging behind the pure play refiners. But with that, let's slip into a short break. More news and updates on the other side of the break.
Good morning and thanks for staying tuned to Market Cafe. Let's move on then, and Marico and Adani Wilmar will be in focus today on the back of its Q1 updates. How have the companies performed? My colleague Winnie joins in with all the details.
Good morning. And starting with Marico, when you look at it, the consolidated revenue, let's talk about that. That's seeing a decline in the low single digits. What they're highlighting is that India business saw a low single digit volume growth as well, while international business remained quite stable in terms of the growth over there. Now, in terms of the urban demand, that was stable, but the rural demand, that has remained unchanged for them. So that means that slowdown and nothing exciting that has happened in terms of a recovery for the rural demand is what the indication we could understand. Now, domestic business was mainly affected by the significant trade destocking that the company saw in Saffola edible oil, and what the company is expecting is that a pickup could maybe be seen in Q2 of FY24 given the sustained healthy trends that they've seen in terms of offtakes as well as market share and penetration in key franchisees of the companies. Other than that, when you look at the margins, gross margins are expected to expand materially during the quarter, and the expansion in operating margins is also expected to drive the double-digit growth in the bottom line of the company. Moving on to Adani Wilmar now, in terms of the company, they're expecting a double-digit volume growth of 25%. The sales value is seeing a decline though, because mainly this is reflective of the sharp decline that we've seen in the edible oil prices. That impacts the profitability of the company as well. It impacted the profitability of the company in FY23 and could impact the company's profitability in Q1 FY24. The same trend is continuing in Q1 FY24 is what the company has highlighted. Food and FMCG business, strong growth of 30%, while urban rural areas have also witnessed strong demand. So urban and rural has seen strong demand for Adani Wilmar. In terms of oil and food, that has recorded a 50% YOY volume growth. Industrials, the volume growth has been at 20% and revenue decline of 15% in terms of the value, mainly due to the correction in the prices of some of the commodities over there. That is the castor products as well as oil products, which have seen an impact in terms of the revenue growth of the company. So yes, all in all, seems like an okay Q1 update coming in from both the companies.
Vinny, for giving us the updates on consumer space. But now moving on to the chemical space, 8 companies were hosted at the IFL investor conference in Ahmedabad, and they said that the common themes that emerged at the conference were that they are bracing in for near-term slowdown while the structural story remains intact. But H1 FY24, that looks a bit bleak because of the declining price trends, and Gujarat-based PSUs are meaningfully intensifying their capex plans into chemicals. The capex plan, that is also largely intact, and the production ramp-up, that remains critical for growth. The Gujarat-based companies, they are intensifying capex, but the question remains whether there will be any delay going forward or any incremental plans in the incremental capex. How will that bode for the companies? That we will know only in the Q1 commentary. And lastly, IFL has retained ad on Deepak Nitrite as well as GSFC. So that was on the chemical key takeaways from the IFL Securities Conference.
All right, now let's shift gears and look at the Indian hospitality sector. And according to a report by OYO, while Q2 is supposed to be a weak quarter for hotels, the hotel chain has seen a 32% uptick in bookings this monsoon versus last year. Sharad is here with all the travel trends this monsoon season. Good morning, Sharad.
Well, yes, a very interesting take on the hospitality theme. The Q2 is generally a very weak quarter in India, and generally the summer vacations is something which is the Q1 where the peak travel season is there. But an interesting change in preference we are seeing, and the current trends highlighted by the OYO report is stated that they have seen an upsurge in bookings coming in. Now this is coming for leisure destinations during the monsoons, and also remember OYO is seeing at least a 32% uptick when it comes to bookings during the monsoon season, and this is compared to the year-on-year basis. Last year, a 124% increase in demand is there for the mountain destinations, and important destinations include Nainital, Mussoorie as well as Shimla, while for the beach folks it's almost 112% rise in the bookings, with names such as Goa and Pondicherry coming to the list. Apart from beaches as well as hills, there is also one more segment, that is the spirituality destinations, and over here Varanasi, Puri, Tirupati and even Amritsar are actually emerging as the top choices. And overall, if you look at the hospitality industry itself, this year there has been a lot of G20 meetings which are happening currently, a lot of blockages are there, and also a lot of sporting events like the ICC Cricket World Cup, which is scheduled to happen in the October to November frame in India, has also spiked up the hotel rates going across. So a long strong movement coming in for the hotel stocks.
Sharad, it's definitely raining bookings for the hotel sector. But now it's the time for the brokerages of the day. We have Vamakshi here with us. Good morning, Vamakshi. We have reports coming in from JP Morgan, Goldman Sachs, as well as Investec. So take us through the stocks that will be in focus on the back of these brokerages.
Well, yes, let's first start off with JP Morgan's note on oil marketing companies. They believe that India's OMCs are in a sweet spot. They believe that discounted barrels are aiding the GRMs, and in fact, they also believe that retail gross marketing margins are at record highs. So overall, their expectation is that Q1 should be strong across India's energy complex. So given all these factors, they maintain an overweight on IOCL as well as HPCL. For BPCL, they maintain a neutral stance, but important to note that they've hiked the target price for all three counters. Apart from that, we also have some brokerage notes coming in on the back of some Q1 updates that the companies have reported. Let's first look at Godrej Consumer. We have a note coming in from Goldman Sachs, and they have highlighted that in the first quarter, GCPL has witnessed very strong traction across segments. The turnaround story for this stock particularly continues to play out. In fact, double-digit India organic volume growth is likely to be the highest within their coverage by a very wide margin. Consolidated EBITDA growth is likely to be very strong, is what Goldman Sachs expects from GCPL. So given all these factors, Goldman Sachs has maintained a buy on GCPL given a target price of 1,150 per share. Apart from that, Marico is also on our radar. Investec has highlighted that the company reported weaker than expected revenue commentary. Low single-digit volume growth was reported in the India business, and this again was weaker than expected. Gross margin expansion is driving double-digit earnings growth, however, and the international business is performing better than the India business. So largely, given all these factors, Investec has maintained a hold rating as far as Marico is concerned, given a target price of 554 per share. And lastly, let's focus in on Bajaj Auto, in focus on the back of a few new launches that the company has been doing recently. And we have a note coming in from CLSA, and they have highlighted that Speed 400 and Scrambler 400X will be positioned as the entry-level motorcycles. The launch looks quite promising, but they are remaining quite cautious. In fact, they're estimating Bajaj Triumph to deliver nearly 60,000 units in FY24 and 120,000 units in FY25 respectively. So on the back of that, CLSA has maintained an outperform rating on Bajaj Auto, given a target price of 4,659 per share.
Alright, thanks Vamakshi for all those details. So on the back of these brokerage notes, keep an eye out on all these stocks in trade today. But with that, we're completely out of time on this edition of Market Cafe. But don't go anywhere, the market takes all the action ahead.